It's tax-free.
Exactly. Where else could you get, you generate income and you don't have to pay tax into it? Definitely.
Welcome to another episode here at our podcast series. I am here to take you to the promised land. And that promised land.
Yes, Moses.
I'm Joshua. Moses couldn't finish the job. I'm here to do that job.
All right.
All right.
Hopefully.
We're going through the walls of Jericho today.
Okay.
And we're breaking down the barriers
Okay.
of understanding how to invest and open a TFSA.
Okay.
How do you go about doing that? What's the first thing that your team, when working with your clients, you tell them why they should open a TFSA?
Well, number one, the main reason, it's the first two letters of TFSA, TF, tax-free.
Oh, I thought it meant something else. Whoa. Tax-free.
So,
okay.
if you whatever profits that you generate, you don't have to pay tax on it. So the only requirements really to open a TFSA are basically three things, right? You've got to be 18 or older, so that wipes you out.
No.
And you have to also be a Canadian resident, not citizen. Resident. So being a resident means you've been in Canada for 183 days or more. Once you've met that 183-day threshold, you are a resident of Canada for tax purposes. So that means you have to file a tax return and include your worldwide income. But you could also open a TFSA. And then the last one, number 3, is that you need to have a SIN number. So if you meet those three things, you're 18 or older, you are a resident of Canada, and you have a SIN number, you could open a TFSA.
So the point is, no matter who you are, once you're a resident in Canada, that means you've been living here for 183 days. Everyone should have a TFSA.
I agree. Yeah.
It's tax-free.
Exactly. Where else could you get, you generate income and you don't have to pay tax into it? Definitely. So everyone should have
Everyone should have a TFSA, so get a TFSA. And the TFSA can be opened by the TFT team.
Oh my goodness.
This is why I'm here.
Who is this guy?
Okay.
We don't pay you enough for it to come up with those things.
Right?
Yeah.
So get your TFSA.
So number one, you could open it, definitely you could open it at whichever financial institution that you deal with. So let it be a bank, credit union, trust company. And if you're looking for guidance, then my team and myself, we're available to help you and guide you in terms of what would be the right investment. So opening the TFSA account is one step. Choosing the right investment for you is the next step.
Excellent. Now let's go to that step. Choosing the right investments. So I just want to pick your brain because people might decide, I want to open my TFSA. I'm going to do it with the team at Tomachek Financial. But what do I put into the TFSA? Right? I've got the pot. What am I boiling in the pot now? Right. So how do you choose, or what do you put into your TFSA?
Well, again, it stems from the individual. So everyone will be different. So the first thing we're going to do is do what is known in the industry as a know your client, KYC. So we're going to figure out what type of risk tolerance, what are your objectives, and what's the time horizon for that particular investment. And based on that, we'll create a portfolio that is best suited for your particular needs. So it could be very low risk, money market, GICs, to very high risk where we're looking at stocks, bonds, and ETFs, things of that nature.
So you can put mutual funds, you can put stocks, you can put bonds, you can put a SEC fund in the TFSA?
Definitely. I would recommend that, definitely.
Okay, so a lot of our listeners like to get their feet wet in the market, try to buy stocks and so on. So in terms of buying stocks, what are maybe the top 3 or 4 things you look at as an investor, in terms of purchasing a stock? Or let's put you back 50 years. Let's say 50 years ago, you're a student in this situation that you're in now.
I'm only 2 years old 50 years ago.
The lies. Okay, 50 years ago, you're a student.
Yeah.
You want to invest in some stocks. What are the things that you would look at?
Yeah, so it's definitely different than where I am right now.
Yeah.
Because where I am right now, I'm still moderate or balanced
Okay.
investor. So I'm looking for dividends.
Okay.
So I'm looking for blue chip stocks. So
Okay.
stocks that would weather the test of time through good times and bad times. But 50 years ago, yeah, I'm looking for growth. Right,
Okay.
I'm looking to potentially double my money. So we're looking for companies that have a consistent track record of growing exponentially, so
Okay.
10%. So I would open my Yahoo Finance, right, and look at the trend for a particular stock and
Okay.
see what the trend has been over the past 10, 20, 30 years. And that would be one of the first thing that I would look at. The second thing is I'm looking at their profitability to ensure that they've been profitable, not just 1 year, not just two, but consistently be proven to be a profitable company. So look at companies like Apple, right? So consistently I've been very much profitable, as opposed to, we've got Tesla that recently has been profitable. So it wouldn't necessarily be on my radar. Not to say if you own Tesla, you would have done very, very well, but it wouldn't meet my particular criteria, because right now we're seeing a shift.
And it's very volatile as an investor.
Definitely. So, profitability, long-term growth, providing dividends, a good track record, and there's such a thing as the beta, right?
Okay.
So
what's the beta?
Beta basically means a correlation to the market. So every single stock has a beta figure, which says, how does it move when the market goes up and when the market goes down? Does it move in tandem? Does it move identical to the stock market? If that's the case, then the beta would be 1. So it says it moves identical, 100% to what the market does. Those stocks do not exist, but that's kind of our guide. So a stock that has a beta of 1 basically says it moves identical. The stock market does 10%, that stock would do 10%. The stock market goes -5, that stock would go -5.
Right.
So what I'm looking for is a low beta stock with a good track record. So that means it's not as risky as the stock market as a whole, as opposed to when I was, 2 years old, I would look for a high beta stock, which says
because you got a better heart.
Yes, it says it moves higher than the market. So when the market goes up, it does even better. But the downside to a high beta stock is that when the stock market goes down, it does worse than the market.
So Pierre's top stock picks there would be 1, you're looking at the longevity of the stock, how it's done, the performance over time. You're looking at the profitability. You are looking at the growth, and you're looking at the beta of the stock as well.
That is correct. And for me, if I could find a low beta stock that has consistent growth with healthy dividends, then that's a stock for me. And guess what? Fits that type. What type of investment meets my criteria?
Dividend. Defensive dividend, long growth.
So what would be an industry that I love?
The bank.
There we go. Holy cow! We have to go a long way to get him to. So
I won the prize. You go.
You can't. I mean, last week we talked about tariffs, so we talked about BMO, having a great. Earnings record, and as a result of that, their stock price went up. If you bought the bank, I'll go back to my days at RBC. If you bought RBC at the bottom when in 2008, 2009 of the financial crisis, if you bought it then, the stock was about $30. You
would have better hair.
Oh, I have. That's where the hair went, right? Because of all those high beta stocks that I bought. But if you had bought at that time, it was around $30, and depending on what time it is when we're recording, RBC is around 170. So that's like 5 times.
That's amazing.
That is 5 times, mind you. You waited about less than 20 years to generate that. So time horizon plays a big part of that. The longer the time, the better that you could weather the storm.
And though these recommendations that we're providing here, it's not guaranteed. So please don't quote us and say, TFT told me to go buy the banks and I lost all my money.
And again,
unlikely, but
again, these are for me. I've
Yeah.
done my KYC for myself. So if it was an actual client, we would sit down and figure out what is best suited. So that's why a lot of times I'm always reticent to provide advice because of the fact that it's just blanket advice out there, and I don't know your particular situation. So the best thing I would say, go sit down with your advisor, sit down with your advisor at the bank, or come with us. We'll provide you with a free consultation, right? And we'll create a portfolio that suits your particular needs.
So your next TFSA is with the TFT team. There you go. That's where we end it. Like, subscribe, get your TFSA with TFT today. That's it for us.
The check is in the mail.
The check is in the mail. I got my $200. It's in my TFSA, and you should too. Take care. Have a good one. We'll catch you on the next one.